Well, good morning, everyone, and welcome to Tuesday morning. It's Stephen Whiteside here from theuptrend.com. In the pre-market this morning, so far, things are very quiet. There's no major economic numbers coming out in the pre-market this morning. The big number today is consumer confidence, which comes out at 10 a.m. this morning. Now, stock index futures are currently trading right around fair value. Commodities are trading higher, with gold up a couple of dollars, but crude oil is up $1.75 at the moment, and that could certainly help the Canadian market on Tuesday. Well, here's an interesting chart. I haven't had this symbol in the database before. This is Trump Media Group, and certainly never wanted to have anybody involved in this stock. It hit a new low yesterday, and I would expect it to continue to move lower from here. Moving on to the VIX, or the Fear Index, it's still on a sell signal for all the major indices. That's supportive for higher stock prices at the moment. It's telling us options traders are not overly concerned. They still have a relatively high level of concern, but they're not overly concerned on Tuesday morning. That would change on Tuesday if we closed above 1852. Now, there's the VIX for the NASDAQ 100, the Russell 2000, and I put in the VIX for the TSX 60 last night. It's not something I've ever relied on. The options market in Canada is very, very small, so I don't think, there's not as many players involved, and so I've never relied on this particular index to help me in the market. But some people have been asking about it, and let's learn together and see if it does give us any indication of a shift in the overall tone of the Canadian market. The first sign something new is happening for this particular VIX is a close on Tuesday above 1241. And from what we're seeing in the pre-market this morning, I don't expect that to happen on Tuesday. Looking at the major index ETFs, it's all about resistance right now. There's the Dow Diamonds up at resistance. There's the S&P 500 up at resistance. There's the equal-weighted S&P 500 up at resistance. That's also true for the NASDAQ 100. That's also true for the equal-weighted NASDAQ 100. And then the next generation NASDAQ 100 has been able to punch through the highs from back in July to the next price target and stop. There's the Russell 2000 running up to resistance last week and then pulling back over the past couple of days. You don't notice that when you look at the VIX for the Russell 2000. There's the small cap ETF up at resistance. And then looking at the microcaps pulled back into the channel yesterday, so certainly they have the ability to generate a sell signal on Tuesday with a close below $121.67, and they did not make it up to our next target. We had resistance at 125. We traded above that for a couple of days before pulling back for the last 3 days now. Looking at the semiconductors, again, hitting resistance and stopping. So here we are, where all the major indices are hitting resistance and stopping in the U.S. In the Canadian market, we have been able to break out above resistance. And looking at the Vanguard Canada ETF, we're trying to get to 49.22. For the iShares for the TSX 60, we hit our next target of $36.33. That was the high yesterday. If we can take that out, then 36.72 comes into play, and that is the top of our current projected trading range. Looking at Canadian banks, here's the equal-weighted bank ETF pulling back slightly. We hit our next price target on Friday of 40.63, and yesterday got as high as 40.60 before pulling back slightly. So no major reversal there. We're up at resistance. If we can punch through that, then 42.19 comes into play. Now, the dogs of the Dow were the big winners yesterday. Intel was up on the day. It is trading above the bottom of the open gap from back in early August. Our next mathematical target for Intel is $25. And then Boeing was the next big winner on the Dow yesterday, not enough to give us a buy signal, and it is currently trading down in the pre-market this morning, so no follow-through for Boeing. Moving on to the world of commodities, and we'll start off in the energy sector. We've got crude oil pulling back yesterday. It's up in the pre-market this morning, heading for the top of that open gap. If we can take that out, then $75 comes into play on the USO. Looking at gasoline, a similar pullback yesterday, a similar open gap, and we're trying to get to 62.50. And notice in both cases we're holding support on the USO at 71.88 for gasoline. It's 59.38, so support is holding, and we may be able to rise up to the next price target on Tuesday. Natural gas punching through, trying to get to 17.19, starting to break out above the top of the flypaper channel. We did that back in the early summer, put in a double top and then pulled back. That is certainly a legitimate target to the upside. We're just not heading there just yet. We need to break away from the flypaper channel first. Looking at Canadian energy stocks, they're on a buy signal right now, but not going anywhere. That's also true for Canadian natural resources. U.S. energy stocks outperforming the Canadian energy stocks at the moment. Southwestern Energy was the big winner and the most actively traded energy stock in the U.S. on Monday. Looking at the world of mining, we had copper up slightly yesterday. Copper miners were up on the day, trying to take out the highs from back in August. The GLD made a new high yesterday. At the same time, gold miners on both sides took some money off the table and pulled back. There's the XGD, there's the GDX, and there's the junior gold miners all pulling back slightly on Monday. The most actively traded gold stock on the TSX is B2 Gold. It was down a little over 3% yesterday. In New York, it was Kinross, and Kinross was up a little over 0.5% on the day. The elephant in the room, of course, is Agnico Eagle, and on Tuesday, we're looking for a close below $109.49. We dipped down to the lower channel line on Thursday before coming back. Now, we have been stuck up here at the 112.50 level. We've traded above it recently, but we haven't broken away from it just yet. If we can start breaking out above the recent high from last week, then 118.75 and 125 do come into play. But it's interesting that the market's really not willing to pay more than $112.50 for this stock at this time, even though gold has been continuing to move higher. Now, looking at silver, the SLV, still having trouble here at 28.13. And then looking at the silver miners themselves, they're having trouble at 35.94. Wheaton Precious Metals, still on a buy signal here, dipping into the channel yesterday. Things would change on Tuesday with a close below $82.68. Okay, we're almost done here. Some of the big cap tech stocks are doing very well at the moment, including Meta. We saw Shopify make a new high yesterday. We've got Tesla moving up to our next price target. Remember, 234.38 was resistance. Our next price target was 250. We closed at 250 on the dot yesterday. We are trading higher this morning, and you can see our next mathematical target is 265.63, and that's where we peaked back in early July. So we are currently trading slightly above 250. We haven't broken away from it yet, but our next price target is up there at 265.63. Now, at the same time that those stocks are moving up, NVIDIA is not going anywhere. In fact, we've been in the channel for the past couple of days, so NVIDIA could actually generate a sell signal on Tuesday if it were to close below $113.43. So it's interesting to see NVIDIA is not in play at the moment. And if you look over here to the left, we put in a high, a lower high, a lower high. And what's going on right now? We may actually be putting in a lower high. So we'll just have to keep an eye on that. But NVIDIA is coming into Tuesday's trading action currently on a buy signal. But right now, it appears to be a very weak buy signal. Okay, folks, that is all for Tuesday morning. Thank you very much for your time and attention. Next time you'll hear my voice is on Wednesday morning, and at that time I'm going to take a closer look at the Canadian stock market.